Hey everyone, this is Larry from wstrades.com. This podcast is about trading stocks and stock options. Any information in these podcasts should not be construed as advice. It's for educational and entertainment purposes only. We are not financial advisors. Hey everyone, it's Larry from wstrades.com. Today we're going to talk about penny stocks. What are they? Why are people drawn to them? And what are some of the risks involved in trading them? First of all, what are penny stocks? According to the SEC, it's any stock that trades for under $5. They usually belong to companies with a very low market cap. They may not be traded on the major exchanges like the New York Stock Exchange or NASDAQ. And they are often very volatile, illiquid, and risky. Penny stocks are sometimes called microcap stocks or OTC stocks. They're different from blue chip stocks or large cap stocks, which are the shares of well-established, very large companies that trade on the major exchanges. So why do people like investing in penny stocks? Well, there's a few possible reasons. One is that they're very cheap. You can buy a ton of shares with a small amount of money. For example, you could buy 10,000 shares of a penny stock for $500, and while you could only buy a few shares of some of these bigger companies, more established like Tesla or Amazon, Google, et cetera, for the same amount of money. Another reason is they have the potential for huge returns. You can see this all over the place. Some of these penny stocks will double or triple within a day or two if they have positive news, such as some of these like micro pharma companies. If they have a positive test or drug result, then you'll see the price just skyrockets. They might have a new product launch, merger announcements, favorable earnings. It can also happen just because of hype, speculation. I see a lot of that, or oftentimes manipulation by promoters or insiders. See a whole lot of that with penny stocks. Third reason that people find them exciting. So penny stocks are often subject to huge swings in price and volume, which creates a thrill for people. Some traders enjoy taking risk and gambling on the market. But before you get too excited, you should definitely be aware of the dangers involved in trading penny stocks. So penny stocks aren't for the faint of heart or the inexperienced investors. And here are some of the risks that you should know before you trade them. A lot of penny stocks are often unregulated and lack transparency. Unlike blue chip stocks, penny stocks don't have to meet certain criteria or standards or requirements to be listed on the exchanges or to file certain financial reports with the SEC. And this means that there's less information available for you to look at to check out the company's finances, their operations, their management, their products. And that also means that there's less oversight and protection for investors like you. Penny stocks are often manipulated and fraudulent because of their low price and low liquidity. Penny stocks are very easy targets for scammers and schemers who want to make a quick buck at the expense of the unexpected investors. Some common scams are the typical pump and dump, where promoters are going to artificially inflate the price of the stock by spreading either false or misleading information. And then once they get the price, to where they think people are going to stop buying in, then they sell their shares and you're just left holding the bag. I'm sure, you've seen this many times in the market, especially during COVID when everyone was getting government money and just kind of a lot of sitting around on your hands. You saw a lot of people, getting into the market, and you'd see pump and dumps left and right during that time. So penny stocks are highly volatile and risky because of their low price and low liquidity. Penny stocks are oftentimes of extreme fluctuations in price and volume. They soar or plummet within a time of minutes or hours without any apparent reason or warning. So I'll see this sometimes. I'll just scan through some like big gainers on the day on Thinkorswim, and I'll click on the news to see, why is this company up 100, 200, 300%? And the news feed will literally just say, no news was found for this move. So, if you see something that's up, 200%, and you look at the news and it literally says that there's no rhyme or reason behind this move, then you should more than likely just skip it, because there's a very good chance that it's just some pump and dump. You see a lot of stuff on like social media, a lot of YouTube stuff on penny stocks. We had one of the commenters on our YouTube channel ask about, I don't recall which ticker it was, but they were asking, why is this thing dumping and there's no news or whatever? And I'm like, well, it's penny stock. It's going to happen. Like, not on all companies, but if you see this massive rip, and then all of a sudden they dump the next day, or, sometimes the same day, then, there's no need. I don't understand why people would ask, why is it dumping? Well, because it was artificially inflated, and it's a trash company. Like, there's a reason most of these companies are penny stocks, and that's because they are horrible companies. They're mismanaged. They have crappy products, whatever it is. You don't see companies like Google or Tesla, McDonald's, any of these like blue chip companies. You don't see them trading for 0.04 cents. There's a reason why they are priced where they're at. If they were a good company, then people would be invested in it, and they wouldn't be in the gutter like they are. And again, some of the stuff, they are hard, or penny stocks are hard to do your research and analyze because of their lack of information and regulation. It's hard to evaluate using fundamental analysis or technical analysis. Fundamental analysis would be if you want to look at the company's financials, their earnings, growth, competitive advantage, and other factors like that. There's not a lot of hope trying to figure that stuff out on a penny stock. And, trying to do technical analysis on them is a nightmare as well. Like, you can see some tickers that, they just make these massive spikes, dumps, and, how do you do technical analysis on that? Like, you're trying to find support and resistance, and it's just all over the place. So it's hard to trade them, using technicals as well. Another thing people don't think about a lot is the high commissions and rates for trading penny stocks. One thing I have several accounts. One's my main trading account. I have a long-term account, and I have an account that is pretty much just my gambling account. Like, I know it could go to zero. I'm doing some highly leveraged stuff, some options, buying some more, I don't know what term I should use, kind of unsavory stocks. Not so much penny stocks, but I will trade penny stocks in that account. But one thing, I don't remember what ticker it was. Oh, it was Mullen Automotive. I had their shares in my account. I had sold a put, and the price dipped under it. I was assigned the 100 shares, and I just completely forgot about it. I don't look at that account too often. And then all of a sudden I get an email about being charged a $40, was it $40 or $50 restructuring fee, because they had done a reverse split, because they had to get back above $1 in value to stay on the exchange. So they did a reverse split. I think it was a 1 for 4, I believe. And it cost me $40 or $50 just for them to do the quote-unquote restructuring fee. So that's something, when these companies do splits, that it's going to cost you a bunch. And then The OTC fee, I don't remember what it is. I want to say it's like $1 something to trade OTC stocks in Thinkorswim. I don't know. I know Webull started having some OTC stocks. I don't know if they charge the fee, and if they're not, then that's kind of weird. I don't know how else they're making money off of trading if they're just eating that dollar whatever it is fee every time people want to trade penny stocks. So it's one reason why I trade on Thinkorswim is it's reputable. I know how they're making their money off of me, and it's option contracts and stuff like that. So in summary, what's the bottom line? Penny stocks aren't for everyone. They're not suitable for long-term investors, beginners, or anyone who's not willing to take on a high level of risk and uncertainty. There are no shortcuts to making wealth in the market. I was just watching a documentary on the whole GameStop fiasco, and yeah, some people made a crap ton of money, but then a lot of the people interviewed lost a ton because they bought in at $300, $400 when GameStop was having its epic squeeze. So yeah, some people made money, but I would be willing to bet even more people lost in that massive run. If you do decide to trade penny stocks, you should do your own research. Don't listen to all these YouTube channels that are trying to pump whatever ticker it is. Stock twits, Wall Street bets, all that stuff. Do your own research on the ticker as as good as you can. Like I said about the not having to file a lot of stuff with the SEC might be difficult, and just go into it knowing that it's going to be a gamble and the odds are stacked against you, and you may end up losing it all. I would definitely, if you're trading penny stocks, have a plan going in, have your stop loss set, or know when you're going to get out and stick to it, because I see this so often online, is people complaining about manipulation and the hedge funds are out to get them, and stuff like that, because they're left holding the bag a year later because they bought this penny stock that they saw someone say something on Wall Street bets, and it's a great company, and somehow they just keep on getting manipulated, and now they're down 90% on their position and still holding the bag on it. So definitely implement your stop losses, have a plan going in, and just know what it is. It's a gamble playing penny stocks. That being said, I actually took a swipe at ticker symbol TTOO, very small position. I literally bought 100 shares when they were trading at 7 cents. I think it's about a week ago. Had my alert set. If they went past 5 cents, I was going to get out. And if I lost the $7, then boo-hoo, I knew what was going on. It was my gambling account, so whatever. And they ended up popping huge today because they were just having some insane volume that I was noticing, and price wasn't really moving. They were still just kind of hovering around 7 cents, but the volume was just crazy. So I thought, all right, I'm gonna grab a few shares. So bought 100 shares, cost me $7, and they popped today, Friday the 7th, and I ended up closing the position up, or I closed half the position today, up 52%. But that's definitely not something that I do very often at all. I don't recommend anyone does it. I literally just saw that they were having some insane volume and picked up, like I said, $7 worth of shares. I wasn't going to dump my whole account into it, and it worked out this time. But I'm willing to bet if I try and do it again, even on something that I see the same thing happening where price is just stagnant and volumes through the roof, I'll probably get got that time and end up losing money. So like I said, just if you're going to play penny stocks, just know that it is a gamble before you even get in, and have your exit and your take profit plan and stick to it. So that's all I got for you guys today. If you have any topics you'd like me to go over, you can comment on this this podcast. Head over to the YouTube channel if you want me to do some technical analysis on whatever tickers. I will give it a shot. And definitely head over to the website. You can check out the trading forum. Keep on trying to add some new stuff to that. Do some technical analysis for free. It's all free to sign up. You can, if you want to join the premium program, you get extra podcasts, a lot of technical analysis, and just trying to kind of build up a community over there. So anyways, thank you guys for listening, and hope you have a good week.
Thanks for taking the time to listen to this episode of the WS Trades podcast. If you are not subscribed to this podcast, please subscribe. Also head over to YouTube and search for WS Trades. You'll find us there as well. We've got trading updates as we make our trades over there, and also educational videos so you can learn about different strategies within the stock market and options trading. And also please head over to wstrades.com. Thanks again.